Yo, what is good, YouTube? If you're not in the free Discord, go join it. It is linked down below, but in today's video, we are going to be going over equilibrium. Oh, I spelled that wrong. My bad. Equilibrium of price ranges. Equilibrium is premium and discount of dealing ranges. So, premium and discount. You want to be longing in the discount, and you want to be shorting in a premium. But how do you go about finding equilibrium, the premium and discount of ranges? So right here we have a depiction of what a chart would look like, right? Something like this. So right here we see that we create this range that we are stuck in, right? So we have this buy side objective and the sell side objective. And within here you want to measure out. So first, let's go over this. You want the 50%, right? Equilibrium is 50% of dealing ranges. Right here is one of the tools that I use. Right here are my settings. If you want to copy this, you can screenshot it, pause the video, do whatever you want. Right there are the settings of this one and the settings of this if you just want a nice clean tool. 50%, black it, extend it to the right, right? So there it is. Right here. So what you want to do is take it from the high of the dealing range to the low of the dealing range. Right there. Let me move this down. Actually, it doesn't even matter. This is not even a real depiction. Right here. So what do we see? We have the low, the high. What do we see here? You want to be longing throughout here, right? You want to be finding bullish PD arrays that we continue to hold, or creating, let's say, an SMT. If we're using ES and NQ, NQ fails to take out this low inside of a PD array, target this high, partials, target the rest up here, failure to get up here, come back into a discount, displacement higher, and then we finally take out this buy side objective. But what do we see? We see displacement back inside the range. So now we have, what? Another range being set from this high to that low. Premium and discount. So now that we have displacement back inside the range, sell side should be next, right? What do we see throughout here? Low resistance liquidity, right? We have failure swings throughout here. So you want to have a stop run. We have a stop run, displacement lower. Here can be somewhere in here to short, right? You want your short to be above a premium. So let's say this actually comes back up and taps into 50%. Then we run that sell side objective, right? Then we get what? Displacement back inside the range. Okay, now we have another range set. This high to this low, right? Let's say this is the 4-hour chart, right? And this displacement back inside the range. On the lower time frame, you would want to what? Use from this high to this low. So what do we see here? Come back into a premium to displace lower, right? This is a 4-hour chart. So this high to this low. Come back into a premium, look on the lower time frame for a short, right? So whenever we're using higher time frame premium and discount, this would be our premium and discount. The displacement leg, you want to measure from the high to the low of the displacement leg. So let's say right here, right? Displacement back in after creating that high, right here, right? I actually didn't even mean to do this, but what do we see throughout here? We just keep tapping equilibrium until we go back to the high, right? So we're going to hop into the chart and show some examples of what this would look like on a real chart. So we're just going to go over the last 2 weeks of price action, I guess. So what do we see right here? We see that we create a low and we create a high, right? But there's no range being set. Right here we start creating that range. So we want to measure out from this high to this low. Where are we chilling at? Directly at equilibrium, right? We are sitting right under equilibrium right throughout here. What do we see right here? We have a new week opening gap, right? So we come in to this new week opening gap and displace higher, right? This is where you would want to come down and measure from this high to this low. Why? Well, it's because on the lower time frames, this displacement right here is where you're going to find your setups throughout here, right? This right here is market open, 9 a.m. So right here, we were sitting at equilibrium all night, and then we finally get that displacement higher, right? But in the overall range, after we create this high and displace lower, now we want to measure out from here, right? Where do we go? Directly to equilibrium of this entire range. We sit right here, fill this new day opening gap right here, come back down into what? Well, we have this bullish PD array. That's what? In a discount. So this right here is where you would want to be framing what? Your longs intraday to go to, I don't know why I'm in replay mode, by the way. Your intraday longs, right here's that 10 a.m. candle, and then we displace through this high, right? So right here, we hold this bullish PD array in a discount, okay? And then after that, what? We see no displacement. No displacement, don't do anything, right? Come up here, no displacement. Oh, look, right here, we finally get displacement lower. Okay, now we have a new high that's set. Where do we go? Equilibrium of the price leg. Okay, well, now that we're sitting, and I'll actually just make this CE so it extends over, right? So now that we're in this equilibrium, what do we want to look for? Well, since we have been respecting bullish PD arrays, right? New day opening or new week opening gap, respected. This fair value gap, respected. Come back down into a discount. This fair value gap, respected. Okay, so now, oh look, right here, imbalance. Look at that. Continues to hold in a discount. Right here at 10 a.m. we come down, sweep these lows, continuation higher. Then we come all the way back up to this high to take buy side liquidity. Okay, so right there, great example of using premium and discount. Sorry. After creating new ranges, right? We use this high, came back into a discount. We use this high after displacement, came back into a discount. Held bullish PD arrays, displaced out of it. We are respecting bullish order flow, right? So if we want to go to, let's say, the daily chart, okay? The daily chart, it's kind of hard to use it in this price action because this is all just consolidation. But where would we measure from, right? We have a low, we have a high. We're inside of this dealing range. Right here, what do we see? We come up, respect equilibrium, come down. Now we're getting back through equilibrium, right? This is exactly how you need to be using it. So if we displace higher, what would we want to do? We'd want to look for a high, come back down into a premium or a discount to continue to buy side if that's where we want to go. Let's go to the weekly chart, right? So right here, what do we see throughout here? We come all the way up here. If we want to measure from this high to this low, we do not get to discount. But if we use this low, we do. But I would be more interested in this low. Why? Because this low respected a bullish PD array to displace higher. So this low has now respected bullish PD arrays and then displaced out to respect another bullish PD array to take out all-time highs, right? So this is the price leg that has taken all-time highs and the buy side objective, right? So you want to be looking for lows that take out a buy side objective and then use that, right? This high created this low and then displaced out of it. So you want to be using this low. We come down into a discount. Let's go to the daily chart. Now, right here, if we create a bullish fair value gap, we could wait to see if price wants to come into this bullish fair value gap that is now in the daily equilibrium or discounted range, right? Get rid of that because that's not what we're using. We're using this high to this low. This fair value gap, if it's created, would be what interests me, right? So this is how I'm using premium and discount, okay? So let's go right here. We'll just go to 11 a.m. We have a high, we have a low. Why am I using this low and not these lows? Because this is a displacement leg lower that created a low. I don't know if this actually, oh yeah, it does. Okay, good. So right here, we get to equilibrium, go to the 5-minute chart. What do we see here? Oh, look, 9:30 open, displacement lower. We have tons of low resistance liquidity. Here's a fair value gap. Here's your breaker block. Here's your stop run. What do we see after we take this high, displacement lower? We come into a premium, right? This is the dealing range we're using on the lower time frame, right? We're not using these lows because this high created this displacement lower. So we're using this high to this low. Okay? Let's do one more so you start to understand. Right here, this high swept liquidity, right? We take out all these lows, displace higher. We want to use this high to this low. I wonder, I doubt we'll go to see if I can go to the 2-minute chart so I don't lose my spot. Yeah, I can't. Oh yeah, I can. What do we see here? Come down into a discount. Was that a 15-minute fair value gap? 15-minute fair value gap. 2-minute chart. What do we see here? Fair value gap. Long, buy side's the target. This is how I use premium and discount. It is very simple. If you have any questions, come hop into the Discord. Say, yo, how do I use it? I'm confused about this. Ask me whatever you want. I will answer. And yeah, other than that, I'm out of here. Peace.